Good morning, Hedgeye Nation. I'm all suited up, and I got a guy here who doesn't need any introduction, Keith McCullough. We're going to go through a bit of background as to the process, how it started, where it is today, and some advice that he has for Hedgeye Nation, and then get into a little bit more as to what I'll call getting to know Keith. So with that, Keith, welcome. Thank you. I know you're fighting through your little illness here, so I really appreciate you being in the studio.
Yeah, I'm going to call this "Try Not to Get Sick" by Keith.
I love it. So for anyone who's kind of joining us, obviously live, this is going into the arena, Keith. So it's for subscribers only this week, and then we're going to release it out for mass replay next week to everybody. So why don't we maybe go to the beginning? We have a lot of new subscribers, and it's also good just for veterans too, like myself. The fact that I'm here, having a one-on-one with you in this studio, is an absolute pinch me moment. I said this on Twitter, but I mean, you've influenced me and this whole team, this whole Hedgeye team. It's influenced me more than I can even truly put into words. So first of all, thank you for that.
No, thank you. I appreciate that. That's humbling. Suffice to say, when you guys say things like that, and I never really thought I don't really ever think about what it ultimately was going to be. It's just be what it is, and all you guys coming along the way, and there are plenty of people that are watching this that are not just friendly with you, but I mean it's part of the community, right?
Yeah.
You guys are quite literally executing on the process, and to me, just to hear that is probably the most humbling thing of all, which is cool.
Yeah, I shared something with you internally, that email last night, and the breadth of people that we have part of Hedgeye Nation, it's incredible. I mean, the gentleman last night, again, I don't want to name names there, but his history, the Vietnam War, all the way to portfolio manager. I mean, it's pretty insane in terms of just the breadth of not only talent that we have, but dedication, transparency, accountability. I mean, all the our virtues, right? It's pretty impressive.
And in particular in recent weeks, where it always happens, after a market bounce or into a market bounce or throughout a market bounce, that those trolls and haters come up. But the better side of Hedgeye is actually that community building itself on the other side of it. Like Dan Holland says internally, he always reminds me if I ever get frustrated, and sometimes I do with the trolling of it all. He's like, look, there's the darkness and there's the light, and the community is the light. So.
Amazing. All right, so let's. My first question is kind of taking a step back, right? So I kind of already alluded to this, but how did your process originally formulate? I know. Again, I'm a massive power user, so I know it started with kind of with the pods and transition to the quads. But do you mind just elaborating sort of how that process sort of developed over time?
Yeah, it's probably won't surprise anybody, but I've always been a process-oriented person. So it started as way back as an athlete. What are the reps? What is the process? What is your work schedule? I don't know how many jobs, at least 3. Where do I get the workouts in? When do I skate? How do I make it to this level? What is my process? That's always been where I've been, just in terms of my starting point.
Yep.
So when I went to Wall Street, first thing, I had a notebook. I saw some people taking notes, not everyone, but I noticed that the people that did take notes, a guy by the name of Terry Cuskley. Okay. He ran the research meeting at Credit Suisse First Boston.
Okay.
So we'd all go in the room, and this guy had fantastic notes. I'm like, oh, okay, I can do that. And he told me, he said, hey, look, man, you don't know anything about anything. You don't know any of the vernacular, any of the jargon. But if you keep writing it down, you're actually going to figure this out. And more importantly, when you have questions, ask questions. So that's foundationally, I still do that every single day. I'm like, Steiner, what is the this financial acronym that I've never heard before?
Right.
So from that perspective, it's always learning. That's what I love about this. It's the one job on the earth where you can play till you're like an old geezer. And again, you can't play in the NHL till you're an old geezer. I mean, your cap is what, Gordie Howe 50?
Yeah, and that's a unique situation.
Yeah. But this one you can learn until I mean, they've neurologically proven that most men lose it from the age into their late 70s. Don't get upset if you haven't. It doesn't mean everybody. That's the problem with it. It's the average of things. But it is a profession where you can constantly evolve and learn. So the first thing that I learned from by the time I got to the buy side, which didn't take long, it was inside of 2 years of being on Wall Street, was again observing and watching how the best analysts and portfolio managers at what was called Dawson Sandberg and then Dawson Giamalva and Dawson Herman, what got Tony Giamalva's name on the door.
Right.
And then what got Russell Herman's name on the door. So again, these measuring and mapping processes were quite clear. Rates of change, signal to rates of change in models. Like that was very clear. Russell Herman would never execute anything that I thought as an analyst without his signal. Now his signal's his signal. My signal, I've incorporated every signal I've seen into my signal. So going through it, it's a long story, but clearly it's been a path of observing, learning what not to do because it doesn't work, seeing certain bosses do better than other bosses or portfolio managers at firms, watching analysts that are better than others. And again, the foundation, of course, of the process is rate of change. So finally getting to the quads really was the pods, from an analyst perspective, because I was an analyst and then a PM. So pod 1 being revenue growth, the rate of change of revenue growth. Pod 2 being the rate of change of cash flow growth or EBIT margins, for example. And that really just gave birth to the quad. So I substitute GDP and inflation for those two things, and voila, here we have an idea. Let's build this up. So it's hard to recap 24 years. But
I hear you. But I think it's a good foundation, right? I mean, like David Salem last week, right? He talked about building that foundation. I think I just really wanted to kind of reiterate that foundation that you built, because a lot of folks come in and they take a snapshot right here in 2022, and they look at like what we've done this year. But it's like it's built upon, to your point, 25 years of you perfecting that process.
Yeah, well, I appreciate it. I mean, that conversation, as anybody who knows this firm or our history knows, that gentleman, that was one of the most amazing discussions I've ever had.
Yeah.
And that's what I mean when I'm humbled. The people that actually have studied and paid attention to what we built here and applied it to what they did, or what they used to do, and now what they do, in his case, it's an amazing thing to hear. I mean, how humbling is that to get a veteran of the game who's played at the highest level, managed billions of dollars, to basically, come in there and say that. Foundationally, though, like the foundation of foundations is, who are you as a person?
Yeah.
Are you willing to put in the work? Are you willing to be honest with yourself? Are you willing to accept that you're going to be sometimes unacceptable? Like your mistakes, you lose a lot of money. If you don't have that at the core, you're going to have a real tough time with this.
Yeah. I wish you could just re-say that. So, Genron, we're going to replay that bit, so that's good.
Well, think of the alternative, right? What is the alternative to what I just said? You're lazy. You're a victim. You point fingers every time you get called out or you're wrong. I mean, it's never your fault.
No.
You don't have to improve your process. Eventually, you're going to be right. I mean, there's so many ways not to be.
Yeah.
That it amplifies that foundation and why it's so strong and why it appeals to so many people. I don't think it's for everybody, by the way, because it's not in life either.
No, agreed. So going along those lines, and you mentioned sort of like, maybe not mistakes, but just, if you think about what you, as you're building that foundation, right, and things that you might have been concentrating on or that you leveraged at the beginning, or you spent a lot of time focused on, that now it's like very either nominal or like not even looked at component to your process. Is there anything that really stands out to you in terms of either snippets of data information or what have you?
Yeah, I mean, they are mistakes by definition if they don't work.
Right.
You can separate a mistake from a failure or some type of function or feature in your model that's just wrong.
Yeah.
A mistake can be you have the right model, but you don't bat 100% like Bernie Madoff, so you're going to have mistakes.
Right.
If the question, and on that level, if the question is about mistakes, if I could go back, I'd make every single mistake that I ever made, because that's the only way that you learn.
Yeah.
Right? So I'd encourage all of you who haven't screwed up as much as I have to make those mistakes. Don't get mad at me for it. Don't thank me for it either. Thank the gods. It's like a huge part of this is learning what not to do.
Yeah, I made a huge mistake going into June. I basically forecasted on what I thought the market was going to do, and I positioned my portfolio that way rather than just refocusing, just listening to the signals. And that allowed me now to just, I'm so much signal, it's just noise out here, and just focus on what is. And you mentioned that today on the macro show. What is, right? And I asked the question about the eyeball, and I've been getting a lot of those eyeball questions. So, but it's just focusing on the what is. What is happening? What is happening in Japan? What is happening in the rates market? What is happening in the FX market? And nothingness can often tell you something.
Yeah.
And it's really valuable.
That's a real important point. I mean, and to that specific example, I mean, that is so in the weeds when you're really nitpicking at what Eyeball did day to day versus this and that. I mean, first of all, you wouldn't be looking at it unless I told you to look at it. Now you're really looking. You're watching Yellowstone, and you don't want to watch a show. You don't want to have a cocktail while you're watching. You don't want to enjoy the show. You want to analyze, like, when that wolf ate that part of that buffalo, like, why was it that specific hair that's on his tooth? I mean, it's like you can get so lost.
Yeah.
You can get now people have a lot of information. They understand, and this is the art of it.
Yeah.
It's an understanding that you have to look at all of it, understand that there's a deep complexity to the system, a nonlinearity to it, and you have to almost dispassionately execute without overthinking it.
Yeah.
Yeah, so the starting point really matters. Now, if you go back to the starting points, like I'd say that, I mean, we put this, Eric, the slide where we show, I think it's slide 5 in the always macro deck, where we show foundationally the, there are 3 specific what not to do's. Like, I mean, in that triangle, we're essentially saying don't start with valuation. That's one thing that I did and screwed up royally, and so do many, many people. So if you think of that, not that I'm supposed to be calling up my own slides for answers, but we're on the same team. I mean, these are big red flags. I mean, if you start with how markets feel and what the valuation of things are, I get why you do that. I did that. I was taught that way. If you start with linear economic theory, I have a BA in economics from Yale. Don't do that. All right? This time is different. That's a beauty. We're going to rally because Tom Lee said so. And that together is don't be that consensus. Yeah. If you continue to think, and by the way, I just did it again, but if we continue to pull a Sierpinski gasket and find all the different things inside of that thing and what not to do, you're going to find more of what not to do, which includes the 50-day moving monkey, which is how you feel, how something looks. These things, man, first of all, you have to deal with it because your boss told you have to deal with it, because that's how they look at it. So I think that those mistakes, I'm critical of things because I've fucked it up.
Yeah.
I've seen others screw it up.
Yeah.
I've fixed it. When I came from a certain hedge fund which was quantitatively oriented that wanted us to run neutral on all factors on a big Barra factor model, I was like, okay, I know how to front run this. So again, learning what not to do. Don't be everyone in the room getting tapped on the shoulder on a small cap factor exposure or sector style on the same day, because you're all going to lose even more that day. Yeah. Like there is a deep practitioner nature to this, which is why I always, again, I'm not, well, I like to make fun of it because it's if this is how you do it, I think it's funny. To be my former self would be very funny.
Yeah.
We could start a whole other firm where I just go back to being my former self, which basically is a caricature of Twitter and all the cartoon characters on that. Yeah. And it's really funny, right? Like, how do you do all that by yourself, by the way, when you start doing it the right way? How do you measure and map the entire universe by yourself? With no trading experience. Yeah. You have no track record. Like unless you could show me a track record and timestamps across cycles, how do you do that? Right?
Yeah.
I don't know.
It's virtually impossible.
Yeah, and shame on us for calling the people out that claim that they have, right? I mean, it's just there's so many things that you have to learn, and you're going to keep learning. Yeah. Because the biggest thing too on mistakes is that just when you think, like I'd say most people would say that our process is pretty refined right now. Mm-hmm. Like today, it's ripping it in markets up today. Now we make money because all the mining exposures are up the moon. It's just when you think that you got it, you're about to screw something up. So it's like that's, and I'm grateful to have this platform to do that. Because if you can't screw up in front of large quantities of people, you're not really screwing up like I do. Yeah.
No, I agree. I agree. So you've also mentioned in the past that if you're in a dark room, if you had one thing.
I know.
I know. This morning it was hotel room, pretty dark outside, and we're going through the global macro for myself. But you mentioned the U.S. dollar, right? It is like if there's one thing that you had in a dark room to kind of trade or have global macro awareness, it'd be the dollar. Do you mind just expanding on I don't want to use the word feeling, but how you incorporate the dollar on in that framework, right? In terms of like the dollar, again, you just talked about this about it's never just one thing, but in terms of again for any new subscribers or folks that just want to kind of get a little bit more inside your brain in terms of that'd be great.
Well, this goes back to, and foundationally, I could have gone. You can kind of go foundationally with a lot of different things. How did we set up the partnership at Hedgeye?
Yep.
I studied Marcus Goldman's foundational principles and how he established the partnership. Your base, your bonus, and your partnership check, which is a team bonus or team check, and you get percentages of those points. Marcus Goldman was also the one to say that. Can you make, that was his identifiably how he would think about a producer. I think about the principles of the partner and can he produce in that order.
Right.
But if you were only to think about the production, and you could hire any asshole, which there are plenty of those that don't have any principles, that do other things that you wouldn't want around your firm, our firm. Can you make money without anyone's opinion? Nothing but yourself.
Yeah.
I know I can. Right. Now I can make a lot more if I have teammates. Right. So what I said on the dollar was foundationally, if you could only have one of all the signals. Now again, I would never use just one thing.
Yeah, exactly.
Let's
reiterate that. It's never just one thing, all right? This is just more of a principle standpoint of what I'm trying to get out of here.
No, but there's if you're to look at my notebook and you've never actually
I've
been
never
able to
seen
look
it.
inside
No, I haven't seen it before.
But, we get close enough
All
on this.
right,
But
all right.
it's that's why the dollar is always at the very top. That signal is in the top. It's at the top. It's at the bottom of the foundation, therefore at the top of the pile in terms of, and that should be yours. Look at that.
It's right there, number 3.
Yeah, it's great. It's at the top of the pile that isn't what everybody stares at.
Oh man, people are gonna be so jealous that they got both of our notebooks right now.
That's really
I've
good.
got 2 notebooks. This one's for notes. This one's risk ranges in the markets.
Well, what you also had there, for today.
Yep.
So if you when you look at this, you had S&P to the VIX.
Yep.
But on this, my dollar signal's down here.
Sure.
But it's still foundationally the most important thing that people that only do stocks don't look at.
Yep.
If you're not looking at the world's global reserve currency,
Yep.
its price, volume, and volatility attributes, then looking at all of cross-currency moves that relate to equities, you don't really look at equities the way we look at equities.
Yep. Yep.
Because every equity trades in the local currency. So, and then we think about FX, cross correlations on rates, equities, commodities, fully loaded. That's why it's not just one thing.
Yeah.
It's one of the bigger things, but it's not just one thing.
Yeah. Now, because I know you'll take the dollar to 12%. Does that influence, again, because it's a larger portion of the book, or is that really just beta adjusted, in terms of in terms of factor, right?
Its historical volatility attributes say that
Yeah.
it can be your biggest position because historically it will have the lowest volatility out of anything that you could buy other than maybe Japanese government bonds X today.
A 60% move yesterday, last night.
Yeah, that's not.
I don't know. I'm relatively young at this. 15 years in my career, but that's a hell of a move in the rates market yesterday. What happened in Japan? It was insane.
That's why we have an insignificant amount of clients that have had that on forever, because one day it's going to pay out. It's just like playing craps.
Yeah.
It's got a huge payout. It's over there. It's not a probability of 0.
Right.
And some of them thought that the probability was going up because global rates were going up.
Sure.
I didn't. I don't have insider information from the Bank of Japan. I don't want to die tomorrow. It's.
Yeah.
And I don't think they had that either. You can burn a lot of capital, by the way, waiting for that.
Yeah.
And a lot of them did. Think about it. If you've waited for that for so long, and today is your one payout, great. That's actually the way a portfolio should be. There should be asymmetric bets in the book. That can be a very small bet, but super high returns. And it was for a lot of people today.
Yeah, absolutely. So as people start to formulate their own process, or do you have any words of wisdom, per se, to help them better execute on their process? Because this is a big thing that I always kind of convey, and I say this in the Week Notebook Review and a beginner's guide. It's your process, right? So for those out there listening to this, it's Keith gave me the foundation of what I built in terms of my process and how I execute. I trade differently than Keith, right? I have, it's relatively the same book, but it certainly can be different sizing, right? Risk tolerance, risk management. But so again, I'm just going to reiterate this because I do it on almost every show, Keith. It's about your process, right? You got to put the time in, the effort, build that foundation to build your process. But obviously we've got you started it all, and anything that you would sort of convey.
Yeah, and when you say that, that's a real important thing that I have. That's basically our entire institutional client base that talks to me. a lot of them try to front run me. So for example, I was just talking to a client before I got on to this institutional portfolio manager, and he's like, McGroarty was saying the other day that he thinks shorting XLE looks interesting. I'm like, well, where do you think you got that from? Because I said it, so it went into your notebook.
It did. Yeah.
But today XLE's up, so today I'm adding it to the short side of I hadn't been shorted. I'm short OIH, and UAE, which is working nicely today. Yeah. But it's like I'll add my energy exposure the way that I'm going to do it. Mm-hmm. Everyone should do it the way that they're going to do it. Mm-hmm. I mean, it's not like, I'm God's gift to everything macro. It's just that I have a process that calls things out that you may express differently than I.
Yep.
And that's, but back to the answer to the question, let's just start with one of these. If you don't have something that you're writing down deliberately because you're so brilliant, because you just remember everything in the world that ticks, great. I'm not that guy. Yeah? So when, I think that the deliberate study, which is why I've been spending so much time on stoicism or anything like that, is it goes all the way back. This isn't new.
Yeah.
Right? So if you don't have a notebook, how do you keep track? Quite literally, score with, however you're going to score it, good and bad decisions. And again, a bad decision isn't making a mistake. Good and bad decisions relative to the process of making decisions. That's what we're trying to find. Because you can make a good decision and get it wrong.
Yeah, it's really
but you get it like some guy, new subscriber obviously, tweeting at me this morning, oh, you were long SILJ yesterday. Well, then I'm long it today. and I was buying more yesterday because it was down yesterday. So that's very typical. Somebody's like, they've used some other service where it's about picks.
Yep.
And the pick is down, like minors, silver, junior minors. This is not for the faint of heart, by the way, for anybody who's ever traded gold, silver. Once you get to junior silver minors, no wonder he's on tilt, right?
Yeah. Ask like any small cap Canadian PM. Yeah, they've had some good years and some very, very bad years. Just trading junior minors, specifically silver junior minors.
Yeah, it's like the last bastion of a lot of bare bones and buried bones. So I get one of these. I do it the way you do it. I get a paper trading account and start on the short side of that.
Yeah.
Like, if you think that trading global macro is tough, try trading the short side for 24 years. If there were a lot of people with good returns on the short side, you'd know about them. Okay, so this is not easy. So if you've not shorted stocks before or shorted all of macro with stocks inside of your book, please do it with monopoly money first or fake money, and then get yourself graduated. That's why we started the trading competition. I wanted to get people comfortable with what you're naturally going to be very uncomfortable doing.
Yeah. Yeah, it's important too on the option side as well, right? I mean, it goes across the book, right? But just shorts, obviously.
Oh, options,
I mean, options. I mean, again, for anybody who's trying to put on a short book using options, I mean, don't start there. I mean, that's just, I mean, there's a reason why it's literally 50 basis points to 100 basis points of capital in terms of max sizing for a reason, right? I mean, it's just, I mean, that's a quick way of blowing up your book.
Options should augment your core positions, cash positions.
Yeah.
If you want to be a short seller, have the cash position on. It's not going to blow you up unless you're dead wrong and have a shitty analyst that blew you up. It's really, have you ever heard me say that? No, because I'm saying your analyst.
Yes.
Whenever there's a mistake in real-time alerts where I get tagged, it never in the history of Hedgeye says McGough's an asshole.
Right.
It's your position. It's my position. I took it.
Yeah.
He's on my team. Yeah, he talked about it. But I really do recommend taking a practice. There's a reason why you practice before you play in real games.
And I've said this before. I mean, when I first started, again, I cut my teeth, equity research associate, moved over to the institutional sales desk. I mean, I've been doing this for relatively, pretty much my entire career, right? I didn't put in a trade for 3 months once I discovered Hedgeye. So it was March 2020. My first trade was gold in May of 2020. It didn't work out very well the first time I did it because it was the tail end of that quad 4. Luckily, I had a cute quad 3 that kind of helped save my ass. But but that was the first trade, and I remember it like again because you risk manage it, and then also made I wouldn't say a mistake, but I certainly had really, really poor sizing on Barrick Gold. I took that bad boy to like 5-6%, and that was a lot of juice. And again, luckily, got saved by a bit of a quad 3. But there was like a 2-3 week period there that I was like, but I wasn't blaming you or Hedgeye. It was just like bro, you made serious sizing mistake here.
Well, people look for, I mean, the entire crypto space was built because people are addicted to the juice.
Yeah.
Again, foundationally, it goes back to who are you? That's why I fundamentally believe that this isn't, I've said 250,000 people would be the paying subscriber base of for starters, the Hedgeye Nation community.
Yep.
People, you have to have a deliberate nature, you have to have discipline, you have to be able to control your emotions, you have to not be going for the juice on every single trade, you have to understand sizing, you have to understand how to incrementally add and subtract your positions, and it takes time. And over time, if you do it that way, you're going to be a lot better than people who go for the juice. You know, it's just a fact.
The other learning curve was minimum sizing, right?
Oh, yeah.
And if you're initiating a position, take it to the minimum sizing.
Right.
And it was something that I really didn't. I didn't really kind of grasp onto it until I had Macro Pro on the rank product, right? And where you see it go in, and you take it there.
Yeah, that's a real important one. I mean, that took me most of these things. It's not like I've been doing that for a decade. You know, so for Apple today, for example, I'm at my minimum, which is 1%, but I've been at my minimum for like 3 days, and it's made a significant amount of money for me, so to speak. But it's not at my max. But it's not at a place where I'm not going to get paid.
Right. And not violating that rule.
Exactly.
All right. So maybe we'll pivot a little bit. We talked a lot about process here.
I thought we were going to start getting into some risk ranges.
I mean, not this show. We'll maybe do an RTA live sometime. I'm not sure, but we get a lot of wonderful feedback, right, from our subscriber base, and we alluded to this at the beginning of the show. What is one of your favorite stories or kind of moments of the last sort of, and again, I know 15 years is a long time frame, but is there anything that really stands out to you, or something that really, maybe it could have been early days where you're just like, dang, like we're doing the right thing here?
There are a lot of moments,
Yeah.
And I generally don't, I don't like anchor on one in life.
Sure.
You know, it'd be like Laura asking me, hey, what was one thing that one of your kids did? Well, that answer is not acceptable. It's not an accepted answer when you have 4 kids.
Yeah, I'm 1 of 5. I know what you mean.
Yeah, you just no, but you asked a real question. So I mean, the real answer is actually. And by the way, this answer is an answer that I never had when I was on the buy side. Never did I have human beings come up to me, shake my hand with tears in their eyes, and in this case, it was it's when we did our first regional in Dallas, or sorry, in California.
In LA, yeah.
And it happened multiple times in the same day.
Interesting.
It was a father and daughter, and it was a father and a father, and both of them in separate moments came up to me and just, it was just like I can't believe that this. This is what you and your team have done for our family. I'm handing it down to my son, or daughter, in this case, daughter. And I mean, they were quite literally like tears of joy. And you don't like, I wasn't expecting that. I'm not owed that. I think it's a thank you to my team, by the way, not to me.
Yeah.
And I said that quickly too, because it's just this is impossible to do without. So I think that, like, in particular post-pandemic, when so many people, we go through the war on this every day. Like, I don't fundamentally believe. I understand why people are anonymous. I got no problem with that. I do have a problem with being an anonymous and unaccountable, or an anonymous thief or a fraud. Like, I got a big problem with that. Yep. And if anybody else got a problem with that, they're probably not going to be part of Hedgeye Nation.
No.
But real people, if you have your real name because you can, that's great. On Twitter, and you want to interact. But a person with a real face and real handshake, obviously, I don't need to know their name. That's an important thing. They incidentally had name tags from Hedgeye, so I knew that. But so you can't actually just come to a Hedgeye event and says I'm a troll and have those moments. But it's like having that, and obviously for anybody who's heard my story, the one moment that I had going all the way back was my mom down by the beach in Thunder Bay asking me, like, in front of her lake house, like, how do you change the world? So I think of those moments as answering my mom's question.
Yeah.
So it's cool.
No, and anecdotally, again, I mean, we haven't really had a lot of chances to have a deep one-on-one, but, about a year ago, your team, they're running how has Hedgeye changed your life, right? And I put a thread together, and the Milburn and Holland and the team, they picked me. They tapped me on the shoulder and said, "You win Macro Pro," and
cool.
I had tears in my eyes, man. I mean, for a young growing family, right? Again, not that it just life-changing, really, right? To be able to have even better access to the tools, more access, be able to dive deeper into the process, and that one moment in time, could go down in history as like one of the reasons why I'm standing right here.
That's awesome.
Just really big shout out to the Hedgeye community and the team here. So it's awesome.
That's cool, and like some people might. Well, in this day and age, people feel something about a lot of things, but again, it's cool, man. It's your experience. It's however you experience, our relationship. Some people initially, I get this feedback too. Initially, Keith, I thought you're an asshole, and in fact, they probably still do. But I really like the process.
Right.
Or they're like, I didn't understand you. Like, just try in life to empathize with the counterparty. Like, try to start with where they're at, and I think you probably start from a better starting point. And just accept that. If it's good for you, it's good for you, and if it's not, then move on.
Move on, exactly. Yeah.
Cool.
Perfect. So another pleasure or opportunity that I get, I get to interact with Hedgeye Nation every day, and so do you, right? It's an absolute joy, and so thank you for all those community members out there that are part of that. But one of the things that I'm curious to kind of have your take on is, I interact with IAs, so investment advisors, or aspiring investment advisors. Some that want to make a career shift, some that are kind of junior folks that are really trying to get that bump up, right? So, you come from the hedge fund side of the world, which is a little bit different than the investment advisory side, but still wealth management, the wealth management world. What kind of advice, what would you like to convey to kind of portfolio managers globally, whether they're running funds institutionally or helping kind of deploy a better way and help the mom and pops out there to preserve, protect, and compound their capital.
I would say that starting with Hedgeye Macro as your North Star, your starting point on everything, is first of all going to generate better returns over time. It's going to limit drawdowns. It's going to compound from a higher level, base level, from wherever your capital does correct.
Yep.
So I believe we've changed the industry. I think that, in particular for an IA, I mean, I spend very little time on the phone with RAs, IAs, just because my day is structured in a way where I have a 3-hour window where I can do institutional client calls, and it actually is tiered to who pays us the most at the institutional client level. So it has nothing to do with me big timing anybody. No. It just has to do with time. Like, what's the value of time? And I'd say I say the same thing to them. I mean, quite frequently, actually, and again, that's humbling as well. I'll have somebody who's been in the business for 5 to 10 years. They're just about, as an analyst, who's just about to be given their first book. I have a lot of calls where they say, "Hey, how would you start this?" I go live in 6 months.
Right.
So again, I go back to this. I say, let's do this. History, the behavioral side of it all, and the math, and let's do signal to quads. Then you got your sectors. Then you have your stock picks or your credits that you're picking.
Yeah.
And if you do it that way, you're going to do better, and you're certainly be differentiated, amidst the crowd of people in the room that you have to compete with. Don't forget that when you're on the buy side at a major hedge fund or long only, your competition sometimes is your teammates.
Yeah, the guy sitting next to you.
Yeah, and everyone's in competition for capital.
Of course.
So it's good to be on the other side of those trades.
Yeah, you might not remember this, but in the summer of 2020, you made a couple comments on the Macro Show about, wanting to allow or let that next generation of advisors, portfolio managers, to be better, right? And it was like I remember that day that you said that, and I walked down into the kitchen and told my wife that I was like, Keith just said something that I know I'm going to be like. I'm going to be executing at a high level. I'm going to be a portfolio manager one day, or helping people in some capacity, right, to do better. And again, I think I don't. It's hard to get that type of feedback sitting here in this studio, but the influence that you have and this team has on people globally is quite high.
That's cool.
So.
I appreciate that. That's And you don't know when it's going to change, but you know how it's going to change.
Yeah.
The differentiation between you as a portfolio manager running your own portfolio, let's start with that.
Yeah.
Everyone is their own portfolio manager, your own asset allocation, your own choices that you make in terms of who you employ to run your money or not. You only learn when the cycle goes from the peak of the cycle to the crash.
Yeah.
Then you learn what the next generation of successful processes and investors are.
Mm-hmm.
So when that's the most important thing. I'd never called it full cycle investing until we got to this part of the cycle. I make stuff up all the time. I'm like, this is perfect. Because the last time we were in a cycle, like when we crashed coming out of the '08, there's always criticisms of me. Like you could rattle them off. It's like really easy. PPP loan, da 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 da. There's like talking points.
He's a trader.
He's a short-term trader. He doesn't know what he's. Fine. It's fine. That's for you. When you're complaining about stuff like that, that's because you see something in yourself you don't like.
Yep.
But when I saw this one coming, I was like, no. This time, I'm going to be the longest of term.
Okay.
I'm going to define it as full investing cycle, which by definition is the longest of term, that understands the immediate to intermediate term risks. Now just say that to your clients as if you're an IA or RAA, and they're going to be like, you've just maybe made the most sense you've made since the whole time you've been
managing the money.
managing the money.
Exactly.
Because generally speaking, you're running people's money who've made money, so they're not idiots.
Yeah.
The people that you listen to on TV are idiots. Because they don't run money. If they did it at a high level, they wouldn't be on TV. Yeah. So, this is really something that I think is a tangible thing now in terms of how we communicate it and coach it and market it, of course. And if people have a problem with the marketing thing, well, what do you want? Dude, since when is there? McDonald's had a Big Mac, but what if they didn't have the golden arches? What if you didn't know where to get it?
Yeah.
We have to put that up in lights every day.
Exactly.
And I'm really happy with the full investing cycle process in terms of how we currently communicate it.
Yeah.
And excited about how the edges of that
Totally.
tweak and evolve.
Yeah, I told you that probably I don't know, second week, third week I was here. It popped up on the Macro Show or something like that, and I told you, Keith, you're like the people that are telling you that you're a day trader, fuck them, because you're the best. Like right now, we are in the best full investing cycle in terms of pivoting quickly when the signal tells you to get out. And excuse me for the F-bomb, guy. But for
I'm not alone.
No, but when the signal tells you to get out or to get long, you just go, right? And it's been, and we've done it with gold recently. We've done it with, you took that. Tipped that little toe in yesterday with the TLT.
Yeah.
And now we're like, okay. But again, we tackled on the Macro Show. We don't need to get into that. But again, it's a perfect example of we did at the beginning of the year and it didn't work. We were just like, let's get out. And then we've just said no, thank you. And it's nothingness, but it's not where we want to be for the last, in terms of the longer end of the curve until kind of the last 2-3 weeks. And if somebody, kind of front ran your signal there, they would have made money as that kind of as we move bearish trend on the 10-year. But anyway, we don't need to get into the nitty gritty of it. But it's been the full cycle investing side of things is you've been absolutely nails. So
It just took me a lot. I mean, it was always the same thing. It just took me
to communicate
a better way. Yeah. Look. I mean, this is let's stay on the same page. I mean, if you could and you were long all the way up until November of 2021, which we were, 2021. And if you could have gotten out, not perfectly on November the 8th, the day that crypto and the Russell peaked, but let's just say somewhere in even within 1 to 6 months, we're here, and the full investing cycle process investor goes bullish there. We're not there. A lot of people wanted to be there, but we're not.
Yeah.
And for me, by the way, this is April of 2009. So to the extent that people may or may not understand that happened. It happened. It doesn't matter, and that's all I want to achieve.
Yeah.
I mean that should be the goal. If there is no, and if there's a better answer out there, I want to hear it. If you could, you would. Don't tell me you can't, because then I'll just agree with you. I know why you can't. You don't have the process to do so.
100%.
But the goal to have the process to nail that sucker, and we won't nail the bottom. Every single one. That I think people are really like, wow, what else would you want to know?
Right. It's pretty simple at the end of the day. No, but that's what we got the team here, right? We got you got yourself, the team, your signal. Everything's going to kind of work together to help guide those at home to execute on that.
Yeah,
right? It's going to be awesome. All right, so we're
been a fun year in that regard.
It has been, right?
Yeah. There have been 3 separate times where you're basically April, August, and now most recently end of November, where you could have thought that this was the bottom.
Yep.
You know, it wasn't. This wasn't the bottom. This, you know, these are not. This didn't happen.
Mm-hmm.
And I think, you know, the best way to get more people to buy into a better way is for it to actually work.
Right.
You know, so that's
Yeah.
it's been a great year in that regard.
Yeah. All right, so we're going to ask kind of one final question, and you're an incredibly family-oriented person, right? I think a lot of folks here, I got the pleasure of meeting many significant others at the holiday party last Thursday night. It was an absolutely wonderful evening. I wish my wife had been there. She would have absolutely adored it.
She gonna come next year?
Yeah, I'm front running that now, and I'm setting up a babysitter. I'm securing something for December of 2023. But you know, how has kind of the family side of things influenced either the way that you kind of structured Hedgeye here, or just sort of how you approach the game in general? Yeah.
I mean, everything.
Yeah.
You know, everything.
I figured that'd be your answer.
Everything. Well, you know, it's always family first, firm, which is some extension of my family, and every decision's born out of those things. Yeah. Family, in my case, fully loaded with my belief in God, and you know, daily prayer twice a day. You know, because it's too much for one man or you know, one nation to bear.
Yeah.
How should I expect to succeed in raising 4 kids with my beautiful wife, Laura, who you got to meet, and have that multiply exponentially as the other 85 or going on 100 people that work alongside me do that with their families? I take huge responsibility in that, and that's like in both. Like, I don't think you should just be selfish in one. You know, that ends in divorce. Yeah. And if you selfishly ignore your teammates or their needs, or on the other side of that, the other side of the trade is if somebody's, you know, underperforming, not executing, not working hard, and playing victim, we're not going to tolerate that either, because that hurts the other members of the team. So I like to have a very common ground. Like, I am not smart enough to have 2 sets of rules for my family and my firm. Everything has to get back to the principles, and it is not easy. It is not easy. It's tough. It's actually really tough, because you have to, it's harder to deal with situations that you truly love, like in the case of my wife and kids and my dog. I never thought I'd love a dog. I hated dogs. I was like, and I didn't hate dogs, but you know, it's like, how do people love their animals? I mean, I love this slobbering, dirty, you know, this guy, he's always around now, and I'm like, I love this guy. But he's got like an 8 to 10 year duration. He's going to be gone one time, and it's going to crush me. Yeah. But how do you separate? You can't. If you have the same principles by which you build your firm and live your life professionally that you do, or at least for me, from a father and a husband's perspective, to me that'll be success. Yeah. You know, no matter how many, like, don't talk to me about TLT or GDX or some position. I care about that point, but I care a lot more about what actually happened across the whole, you know, accountable track record of the life and the firm. 100%.
It's one of the first things that stood out to me as I came through that door, you know, about 2 months ago, and it was exactly that point. It was the family dynamic, the family first. It's a community here. You know, it's an extension of your family, and it's a beautiful place. It's a beautiful place to work. I'm thrilled to be in this seat, and so just, you know, thank you for building that. I think you know, we got it's going to be a really fun, you know, next full cycle, right? And it's going to be a lot of fun. We're only just beginning, or certainly I'm just beginning here, and it's been great. So appreciate that. And with that, I think we're going to kind of wrap it up here. So you've got 2 Irish Canadian Catholic boys, you know, and I hope we're wishing you all a very happy holiday and a very spectacular new year. So with that, you know, thank you, Keith, for your time. We appreciate it. And maybe we'll do another one of these soon.
Thank you for all you do for Hedgeye Nation.
Yeah, appreciate it, buddy. All right, guys. See you soon.